Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Equities are fractionally higher amid pressure from rising oil prices. Currently, ICE Brent crude is trading above $100 a barrel. It surpassed $100 a barrel last week for the first time since 2022. Investors are also gauging the impact of the conflict in the Middle East is having on inflation and, in turn, Fed policy. The central bank delivers its next rate cut decision on Wednesday, though investors are pricing in almost no chance of a rate cut. That's according to the latest data. Here's what else is on tap this hour. Blockchain company 00 recently launched Edge, which delivers blockchain data to traders in real time. 00's co-founder, Austin Federa, he's going to join me live in studio to break down the new tech. Meanwhile, I was recently at the ICR Consumer Conference in Orlando, Florida, home of Disneyland, where I caught up with David Cantu, CEO of Craftable, a Texas-based hospitality management platform. You're going to want to hear what he had to say about trends in restaurant tech. And at 9:30 a.m. Eastern, Ireland Inc. will ring the opening bell, honoring the contributions of Irish business to the U.S. economy. After the bell, I'll speak with Ireland Inc. President Ian Hyland and Ireland's Minister of Tourism Peter Burke about the country's economic ties to the U.S. on the eve of St. Patrick's Day. But we begin with the markets, as we usually do here on NYSE Live. Joining me now is Greg Farinello. He's the Executive Director and Head of U.S. Rates at Amerivet Securities. Greg, welcome.
Ashley, good to see you.
All right.
Thank you for having me again.
Of course. Yeah. And speaking of St. Patrick's Day, love your green tie.
Yeah, I got the colors on.
Yeah, you got the colors matching our lovely cubes. So as we head into today's session, what are you going to be looking forward to most closely?
So look, I mean, I think the markets in general right now, there's a confluence of events, and my focus right now is on the Middle East, clearly, and it's on oil as well. And if you look at markets generically, I think we're tracking oil. We're tracking where this is going. At this point, if you listen to the president, he's saying we're closer to the end than not. Certainly, it's not a supply issue, it's a flow issue. And I think there are a lot of countries that are coming together right now to try and make sure that the flow of oil is right. It's not to say that oil prices can't go higher, but that's what we're tracking right now. And I think risk assets in general, even treasuries and rates, have been tracking the price of oil.
As I mentioned, ICE Brent crude oil is currently trading at $102 a barrel. What impact does that have on the economy and the average American?
So my view on the increase in oil is less inflationary. I think it's more over time. If we stay here, it will come out of growth. And that's, I think, a very tricky dynamic for central banks in general, because, typically higher energy prices equate to inflation, and we could get some of that. At the same time, I do think it will come out of growth as well. So they're going to have to balance that, and they're going to have to speak to that this week.
And the Fed's March meeting starts tomorrow. The decision will be handed down on Wednesday at 2 p.m. Eastern. Do you think the conflict in the Middle East will have any impact on that? And what are you anticipating?
So we're priced for nothing right now. If anything, if you look at the forward curve in terms of Fed pricing, we're down to one rate cut for 2026. It's a long year. I mean, I think we could potentially get more than one rate cut, but that's what the market is pricing right now. I don't think the market is irrational in terms of what they're seeing and what they're pricing, given what's going on in market dynamics. And I think Jay Powell will talk to that, but he's toward the end of his term. He's not going to commit to anything at this point. They have lowered rates, in fairness. I think the rate structure needs to come down more from here, but he's not going to commit to that short term.
All right, we saw a GDP downward revision on Friday to 0.7%. Do you think that's going to have any impact on Fed policy?
I don't. No. I mean, I'm constructive on the economy in general. When I look at what's going on abroad, I mean, short term, yes. I mean, the price of energy could affect the consumer. It could affect the economy. But I am still very constructive on the economy based on policy, based on what I'm seeing coming out of Washington going forward. So we think the economy is still in pretty good shape. We think real GDP can grow, at 2%, 2% plus. And we remain constructive on the economy in general. So the derivations of GDP are being influenced by a lot of different things right now, but we remain constructive on the economy in general.
And with Fed Chair Powell nearing the end of his term, how much guidance do you think realistically he can give at this point?
None. I mean, he's not going to give you much guidance. He's really not. And that's fair. I think the market will take it into its own hands. We have Kevin Warsh, I think, will be confirmed. Ultimately, it's a little bit of a complicated process politically, but I think ultimately he will be confirmed. And I think the bias will still be for rates to come down here as we move toward the end of 2026 and into 2027. So I do not expect much guidance from Fed Chair Powell this week.
And I'm sorry to step over you. We've seen some softer jobs numbers come out. Do you think the Fed's going to acknowledge that?
Well, I think Chair Powell has acknowledged that. In fairness to him, Fed Governor Chris Waller, who I respect a lot, has been very vocal about this. The job numbers have come down. I mean, the job market is certainly on the weaker side. It doesn't need to stay on the weaker side. That is a concern. So on one hand, you have softer job numbers. On the other hand, you have now this pocket of higher energy prices at the same time. So it's a tough balancing act. My personal view is it's jobs over inflation right now. I'm not worried about inflation, even with this spike in energy, but I do get concerned about the job market because once that starts to move in a certain direction, it's hard to pull back.
And you say the markets have hit a de-risking environment. What does that mean?
So, we started 2026. We had questions around AI. We had questions around private equity. We had the tariff ruling coming out of the Supreme Court. And then now this geopolitical risk, which, if you look at geopolitical risk, even with Ukraine and Russia, it really hasn't been a big issue for markets. What's changed here now is this spike in energy prices. And ultimately, if you look at energy price spikes historically, they spike, they come down. So we will normalize at some point. But investors they're nervous in general. I mean, that's what it comes down to. So you don't want things to get too out of control. And we can't predict exactly where things are going to go, but I still think it's a good investing environment in general. But we have reached a de-risking environment here where investors are saying, we just don't know exactly what's going on and how it's going on. So the president needs to communicate, I think, very clearly in terms of what the ultimate objectives are. The longer this affair in Iran goes on, investors are not going to be comfortable with that. So we need some sort of exit ramp, and communication is going to be key. But right now, I think investors are nervous for sure.
All right, Greg Farinello from Amerivet Securities, thank you so much for joining us at the New York Stock Exchange.
Thank you, Ashley.
Great to see you. Coming up, blockchain company DoubleZero recently launched Edge. Its co-founder, Austin Federa, he's going to join me live in studio to break it all down next.
It means so much to stand here today on International Women's Day at the New York Stock Exchange. When I look around this room at the leaders, entrepreneurs, advocates, and change makers, I feel something powerful. True power isn't just building something for yourself. It's building something that lifts other women up. That's why I'm using this platform to highlight women-owned small businesses. Gloria once said that dreaming is a form of planning. I dreamed of building something of my own. Today, that dream has become a responsibility. Because the future of finance, leadership, and this economy is unapologetically female. I'm looking forward to ringing the bell and celebrating with you all afterward. Loves it.
We literally have changed the entire baby food industry.
To all of these little kids who inspire us and make us want to build a better world, we're actually doing it.
You guys have been there since the very beginning. You deserve everything that happens today.
Welcome back to NYSE Live. Crypto is getting a dose of Wall Street speed with 00 Edge. It's a new platform delivering real-time data to traders using technology long relied on in traditional markets. 00 co-founder Austin Federa joins me now to break it all down. Austin, welcome.
Thanks for having me.
All right, so before we get into the product, what is 00?
So 00 is a global high-speed fiber network. This is the same type of fiber networks that Wall Street and traditional finance have been using for decades to move data around the world, but it's run and powered by a blockchain and run by multiple independent companies. And that's really what makes it suitable for what blockchain needs as opposed to what Wall Street needs.
All right, you just announced 00 Edge. Can you walk us through that product?
Yeah, so 00 Edge uses a whole bunch of technology that's not available on the public internet, but has been used in traditional finance for 10 or 15 years. Things like multicast and dedicated fiber. And really what 00 Edge is all about is delivering the data traders need faster than it's possible through any other type of system. And so in finance and trading, speed is the lifeblood of markets. The faster you can get data, the faster you can make trades, the tighter markets are. This whole thing has not really been available in crypto before, because you can think of the problem as, imagine if the New York Stock Exchange moved somewhere else in the world every 1.6 seconds. So the problem of traders getting data from a market that is now in New York, now it's in Singapore, now it's in Amsterdam, now it's in London, that's a really big data problem that traditional markets aren't really set up to serve.
So what does this look like, practically speaking? If I am a user, I'm using your platform, and I have access to 00 Edge, what does that look like in practice?
Yeah, so the first market that 00 Edge is addressing is basically on-chain trading on Solana. So it's the market updates that come out of the Solana blockchain as quickly as possible. And so if you're subscribing to 00 Edge, you receive basically a fire hose of all of the updates from the Solana blockchain. And that's really something that historically you had to go through this kind of cumbersome system of getting data off the public internet, and it would come in out of order, or it would come in at different latencies depending on where you are in the world. And it basically made the experience for professional traders unpredictable. And when you have unpredictability, you have to price in risk, and so you have worse quoting than you'd get otherwise. And so this is really a tool that finance has been using for years to quote better, to trade better, to make markets more efficient. And for the first time, it's now available in crypto.
And what kind of data is coming in?
Yeah, so you can sort of think about this as similar to the raw data feed that a trading firm might be subscribing to from a Wall Street data provider. So, here at NYSE or at NASDAQ, there are folks who are subscribing to feeds that come off of the market that are produced by the exchange themselves or a service provider, and they're consuming that data, and in real time, their trade systems are deciding, should I make a trade? Should I cancel an existing order? And we're providing that same type of data feed, but suited to crypto traders and crypto market making firms, and obviously a different type of data than comes out of an equities exchange.
We're seeing a real intersection between traditional finance and the digital asset space. In fact, CoinDesk is launching a show here at the New York Stock Exchange today, 1 p.m. on CoinDesk. On that topic, just this like intersection, do you think that this is a step further in that direction, 00 Edge?
Yes, certainly. And you can also think about this as right now, this is data from Solana getting out to traditional traders. The reverse will also be true as we start to see tokenized equities and different types of tokenized traditional financial products existing and trading on chain. Fast data feeds are just as important. You want to make sure that the pricing on chain is reflective of wherever price discovery is happening, whether that's a traditional exchange venue or that's a centralized trading venue. You want to make sure those prices are all in sync. This is what high frequency trading and arbitrage traders live and die by. And so the faster you can get data, the better those decisions can be made. The lower spreads you see in the market, the better pricing for users.
What do you think of the regulatory environment in the past year, like especially with Genius and Clarity? Do you think it's making endeavors like this, like your product, easier?
We certainly found so. So 00 was the first crypto project in, I think, 4.5 years to receive a no action letter from the SEC. And that no action letter pretty much said that the token and the way it's used in the network is not characterized as a security. And that's been instrumental in helping telecom companies and Wall Street firms be willing to engage with and adopt the 00 technology. And so this change in regulation, it is meaningful. It is not done. We still have a lot of work to do to actually get us to a place where the regulatory landscape for crypto makes it easier to operate, but it's a remarkable upgrade compared to the last few years.
In our last 30 seconds, any new products in the pipeline? What's coming up for 00?
Sure. So, I mean, 00 Edge, the beautiful thing about this being a platform technology is it can serve all types of fast data feeds. So there's traditional data feeds that Reuters and Bloomberg provide. Those are well serviced, but prediction markets are a whole new area. There's many other blockchains than just Solana that Edge can provide fast market data access to. So there's a whole bunch of new areas you'll see us expanding into soon.
All right, 00 co-founder Austin Federa, thank you so much for joining us at the New York Stock Exchange.
Thank you.
Up next, I was recently at the ICR Consumer Conference in Orlando, Florida, where I caught up with David Cantu. He is the CEO of Texas-based hospitality management platform Craftable. You're going to want to hear what he had to say about trends in restaurant tech and more. Stick around.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by Direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Earlier this year, industry leaders gathered to discuss new consumer trends at the 28th annual ICR conference in Orlando, Florida. I recently caught up with David Cantu. He's the CEO of Texas-based hospitality management platform Craftable. Listen to what he had to say about the rise of AI and restaurant tech.
So we're intelligent restaurant back office solution, offering ordering, AP automation, inventory, and recipe management.
So in practice, what does that look like? If I'm a customer of Craftable, what services are you providing to me?
So think anything coming into the restaurant, anything that was ordered. So we're that orders system to where we have all the SKUs of where they can order, whether that be food or it could be liquor, beer, wine, any of their drinks, in addition to paper goods, all the supplies. We are also the receiving mechanism to where we capture invoices. We call it AP automation, to where taking a snapshot, leveraging AI and an agent, we're taking this regular format, turning it digital, embedding that directly into the general ledger, where these brands have full visibility into their real-time food cost.
And I hear you saying that you're innovating by using AI, new technology. How do you stay true to the core of your business, which is hospitality, while continuing to innovate with technology?
Well, we're not about replacing people. We're about providing, the automation of what are the insights, what is the clarity that an operator needs to understand how they can operate the best restaurant more efficiently. Now, I would love to say that we're going to teach them hospitality, but those are part of the things that they love and they grow up. I was a restaurateur for a long time, so loved providing great meals, great service with hospitality. What we teach them is really more on the financial side. Like, where is their potential loss, waste? Where are they overspending? Where could they possibly even have pricing adjustments to where everything purchased, capturing, we're flagging it if it's off of their normal price, to where we can take that all the way through the recipe items straight to the plate cost. So they understand if certain dishes or drinks have a lower margin based on something recently purchased.
Do you have any statistics around how this is helping restaurants' bottom line?
So typically, right now, so the margins is probably the biggest challenge that restaurateurs face today. A lot of them keep focusing on taking price, but the median margins right now for full service restaurants is about 2.8%, 4% based on fast casual restaurants. So with that, you think about your two highest controllable expenses, food cost and labor cost runs around 65 to 68%. Outside of that, there's paper goods, there's chemicals, there's linen, there's utilities, there's comps, there's a tremendous amount of other waste that are occurring. So they didn't have visibility prior to this before. They usually have food and labor, but we're allowing them to see where cost is leaking. Like, where are they losing by showing variances? So typically, most back office will claim 2 to 3%. With us, because we're going beyond food and labor, our focus is on 3 to 5% savings that we're seeing most of these restaurants. Now, it takes discipline and practice on, how they manage the day-to-day, but we give them the tools, we give them the insights of what they need to understand where that focus or where that leakage is, whether it be Tito's vodka or ribeyes, where they understand where they may be losing on a specific item. They may be walking out the door or may be wasted due to spoilage by over-ordering. That's the kind of clarity we'll give these operators.
How much waste do restaurants see on average per year?
Whew. Well, let me tell you, like the industry waste, I think it's somewhere around 20 to 25 billion pounds of waste in restaurants. So typically waste is probably anywhere, 4 to 8% is what they may see on their specific food. But like 20 billion pounds of waste it can feed 7 million people for a full year. So waste is pretty dramatic through the restaurant. Again, this is over ordering, over portioning, things that, just end up in the trash.
And what has your growth trajectory been since you took the helm at Craftable?
I've been on 6 months, so I wish I could say 150%. But full excitement, we are continuing to see, we're double-digit growth, and we have been double-digit growth for the past 3 years. And as far as us, really our focus is continuing we're not just in restaurants, in the restaurant industry, we're in restaurants and hotels, but we're also supporting hotels' entire procurement to pay. So it's the two industries we're serving. But we are private. I can tell you that we're pleased on where we're growing, but we still have a lot more room to grow.
And what is your hope for the growth trajectory for 2026, and how do you plan to get there?
You know, this for us, we are known for, I would say, these really chef-inspired, chef-driven, high culinary, high mixology type brands. We're really focused on taking this up market to more of the single brand, multi-unit chains. You know, Mo Betta's is a customer of ours, Savory Fund. We work with all of their brands in restaurants. We're looking for that high growth. So I would say even specialty side, we're doing a lot of work with some great coffee companies out there. You know, we're really focused on growth brands that see innovation as the next frontier because they want to install a technology and not think about it. They just want to scale and grow. We want to be that partner with them. So we're pretty bullish about this year. There's a lot of innovation and development as we think of the entire workflow from procurement to pay. And we're implementing that throughout the course of the next 4 quarters in our roadmap.
Thank you to David Cantu for that interview. And after the break, Ireland Inc. will ring the opening bell, honoring the contributions of Irish businesses to the U.S. economy. We're going to take you there after this short commercial break.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. In just a moment, Ireland Inc. will ring the opening bell as part of the NYSE's annual Ireland Day. Ireland Inc. is a business platform and advisory group focused on strengthening the economic ties between Ireland and the United States. It provides unique C-suite engagement platforms to Irish corporations that are investing across the United States. Ireland is now the 9th largest foreign direct investor in the U.S., and Ireland Inc. works with a range of blue-chip global Irish businesses, reaffirming Ireland's position as a critical economic partner to the U.S., and in doing so, communicates with Irish business brands collectively on a bespoke basis. There they are up at the podium. The president of Ireland Inc. is going to ring the opening bell, Ian Hyland. Let's go to the bell. The luck of the Irish has landed at the New York Stock Exchange, Ireland Inc., ringing the opening bell on the eve of St. Patrick's Day. And the U.S. stock market is officially open for trade. Joining me now to share more is Maggie Vo, Managing General Partner and CIO at Fuel Venture Capital. Maggie, welcome.
Hi, Ashley. So excited to be here on Monday and right after the opening bell.
So excited to have you. So the session just kicked off. What are you going to be looking at most closely today, Maggie?
I'm looking at today is obviously 2026 has been a very interesting year, very different, from what we expected going into 2026. We have to navigate a multiple shock at the same time. Obviously, the structural disruption of the enterprise software, and on top of that, we have the energy shock from the war. So those are the two, macro risks that we navigating right now. But we stay very constructive on the U.S. equity.
All right, and we are starting to see the IPO market open up again for venture-backed companies. Can you speak into that?
Yeah, that is, an exciting thing because, as you know, last year was the best year for U.S. VC-backed tech IPOs in 2021. Going to this year, we expect that, the windows still stay open, but the themes continue to be selectivity for high quality IPO because companies nowadays going to join the public market facing a much higher bar going public. Like in the past, when you look at the revenue level, it might be 200 million to 400 million back in the day, 2020, 2021. Today, expectation is for 800 million. And on the other hand, back in 2021, only 70 to 80% of owner IPO were unprofitable. And today, when you go to the public market, especially if you're a traditional software, profitability is a very important factor, especially if you don't have any AI components and more like an AI powered company.
Maggie, for investors who do want exposure to AI, what is the smartest way to think about building a portfolio?
Well, that's a great question. And that, for an investor who want exposure to the AI, obviously, in the public market, you can gain exposure through the infrastructure. I'll think of it as the pick and shovel, like semiconductor, chip fabrication, data center build-out power infrastructure, like NVIDIA, TSMC, Broadcom. Or you can gain exposure through all of the hyperscale, like Microsoft, Google, Amazon, and Meta. But to gain pure, exposure to AI, you have to go into the private market because private market is where all of the AI native companies are building right now. So I think a very important question that every investor should ask: why only invest in the companies in the public market that are already big in the index today, instead of going to the private market so that you can you can invest in a company that will be big in the index in the next 10 years. So to build a portfolio exposed to AI, we recommend that you have to have both the investment in public and in the private market.
How do you get into the private markets?
Obviously, there's a lot of different options. But, at Fuel Venture Capital, we look at things like, nowadays, if you want to gain exposure to one of the pure large language model like OpenAI or Anthropic, as you know, that is quite challenging. You either go through a multiple layer of SPV and with the fee tracks. So one way that we offering our investor is to gain exposure to those companies through employee stock option, which is a very creative and innovative product that we are launching right now. So that's in one way. And then at the early stage, we have, venture investment going early, identify the companies that building, AI disrupted technology. And that is the way to gain exposure to AI at the early stage.
All right, and it is Women's History Month. How are things changing for female founders raising venture capital, particularly in the AI space?
I love this question. This is actually one of my favorite questions for especially the month of March. So, like how women was always pigeonholed into certain sectors, such as, consumer, healthcare, or lifestyle businesses. Because the moment a female founder walks into a room, they're pitching. The first question, what do they get? How technical are you? Right? And those are the questions that the male founder don't be asked. So with the AI is lowering the barrier to build technical companies. So with AI, it's allowing female to build, technical companies, and launching a deep tech startup require a large engineering team, significant infrastructure, and access to specialized network. So with AI today, the female founder can go and build those technical companies, which is the constraint that they faced since in the past.
All right. And anything else on your radar in our last 30 seconds that you're looking at right now?
Are you asking for the public market or the private market?
Public markets.
Public market, I'm watching one of the cybersecurity stocks right now. They have been corrected since the beginning of the years. And I believe that cybersecurity is, the sector that have the network moat, and it's the space that, failure is not an option. So, I'm watching them to build a position in cybersecurity software stock.
All right. Thank you, Maggie Vo, Managing General Partner and CIO at Fuel Venture Capital, for joining us on NYSE Live.
Thank you. Thank you so much.
Still to come, Base Power is a Texas-based electric company that aims to empower customers with low-cost energy. Its co-founder and COO, Justin Lopas, recently joined me to share what growth will look like for the company in 2026. And on the eve of St. Patrick's Day, it is Ireland Day here at the New York Stock Exchange. I'm going to speak with Peter Burke, Ireland's Minister for Enterprise, Tourism and Unemployment. Then I'm going to speak with today's bell ringer, Ireland Inc. President Ian Hyland, about why the economic ties between Ireland and the U.S. matter. You won't want to miss it.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. Base Power is a Texas-based electric company that aims to empower customers with low-cost energy. Its co-founder and COO, Justin Lopas, recently joined me here at the New York Stock Exchange to share about the company's growth. Take a listen.
Yeah, so we're a energy technology company. So we design and manufacture energy storage devices. We then install them on single-family homes, and then we own and operate them alongside our partners that are utilities to support the grid. So we charge when there's excess abundant energy, raising the floor of the demand, and then we discharge during peak times to lower that peak demand and utilize the existing grid infrastructure far more effectively, all while lowering costs and adding reliability for homeowners. So the battery acts kind of like a backup generator for the home. When the power goes out, the homeowner they get everything in the battery for their access. And when the grid is up and running, we're using it to support the grid.
So what differentiates you from other energy companies?
Yeah, so we're a distributed energy company. So most battery developers will go buy or build shipping container-sized batteries. They'll buy some farmland, they'll put those batteries on that farmland, and then they will wait many, many years in the interconnection queue to get that connected into the grid. We do it in a far different manner. We take that big battery and we chop it up into a much little pieces. We put it at the edge of the grid, co-located with a load, so on the home. And also, we own and operate the batteries. So instead of selling them to the homeowner, as a traditional battery company that sells to homes would, we don't charge the homeowner almost anything. It's just a few $100s instead of the tens of thousands of dollars that most batteries typically cost. Because again, we continue to own and operate that battery, and that battery is used 99% of the time supporting the grid, and just those handful of hours or days a year, it's used to support the home in an event of a backup.
All right, and you announced partnerships with El Paso and CoServe. Break those down for us.
Yeah, so we have two different business models. One is in the retail choice areas. We're a retailer. These are in the regulated parts of the state of Texas, as well as most of the rest of the country. It's a vertically integrated, regulated utility model. And so these partnerships are ones where we partner with the utility. We go to the homeowner together and we say, hey, we'd like to give you a battery at almost no cost. And that battery will back you up if the grid is off for whatever reason. But more importantly, the utility gets to use it to support their day-to-day operations, to reduce their peak loads, and to add capacity to their existing infrastructure. So we're so thankful to be working with El Paso out in West Texas, CoServe in the Dallas-Fort Worth area. We just today announced a 100-megawatt deal with them. And these are forward-thinking utilities that are looking at their systems, and they're looking to add capacity quickly. And they're coming to us because we can add that capacity quickly, reliably, and most importantly, affordably for them and the homeowners that they serve.
And speaking of Texas, you just opened a new factory where you're based, Austin, Texas.
That's right.
Tell me what's going on there.
Yeah, so the batteries that I'm speaking of that we put on tens of thousands of homes throughout the state today, those come out of our factory. Our factory is just across the street from our office near downtown Austin in the old Austin American Statesman building, the old printing press. It's a very historic site. We're so thankful to have been able to utilize it and build our factory there. But we're building battery modules, battery packs, and our power electronics that convert all the energy to go in and out of the battery, all there. And we're hiring across the board for folks in the factory, our manufacturing engineers. A lot of the equipment that we've developed inside of the factory is custom and ours. And so it's a really vertically integrated approach. We design and manufacture, we install, and then we own and operate.
And why did you decide to get into the energy business?
Yeah, it's always been an interest of mine, and there's, energy is really the foundation of so much. The big, discussions and talking points today around AI, and certainly energy is the bottleneck, and the grid we think is the bottleneck to AI. But more importantly, what we find, and this is, there's many studies on this, that the more energy that a society is able to, produce, transmit, and consume, the higher the standard of living. And so our real, model at the end of the day is increasing the amount of energy that humans and Americans and Texans can consume. We're doing that with our distributed energy technology, and we'll continue to expand into other energy technologies and other business models over time.
And I understand there has been an increased demand for energy, not only because of AI data centers, but things like climate change, and there's other factors. What do you think about the grid? Do you think there is enough energy?
Well, no, we have a very large deficit from what we could pull from the grid to what we actually can. AI is definitely driving a lot of that. There's a very large increase there. But even just electric vehicles, heating and cooling being electrified, electrification of heavy industry and steel and such, it's sort of this Jevons paradox issue that we see, which is as you add more supply, you get more demand because there's more new use cases for that energy. Also, if you look at the AI race with China and other countries around the world, we are far behind China from a total energy generation and transmission and distribution capacity perspective, and so we need to keep up. And hopefully at Base Power we're able to play a small and increasingly large part in that story. But no, to answer your question, more energy is definitely needed both on the generation and increasingly on the ability to actually get the energy to where it's going on the transmission and distribution side, which is really what we're focused on today.
What is your hope for Base Power in 2026?
Well, we hope to sign more partnerships and do work with more utilities both in and out of Texas. We're also expanding our factories. We're increasing our production rate and developing more batteries and installing more of them. Right, we have an increasingly large workforce that we're so thankful to have alongside us, helping to install these systems throughout the state and again outside of Texas. And we'll also start looking at new products outside of just the residential energy storage systems that we're currently building today, and again expand that kind of energy platform company plan that we have.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. And we've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly. It is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Ireland Day just rang the opening bell to open today's session, and joining me now is Peter Burke. He's Ireland's Minister for Enterprise, Tourism and Employment. Peter, welcome to the New York Stock Exchange.
It's great to be here, a very exciting day for Ireland. We are announcing €6.1 billion of investment in 2029 with Irish companies exporting out here in the US, currently employ over 200,000 people across the 50 states, and we're really looking forward to the next chapter of that investment.
What was it like for you to be up at the opening bell podium, and why is it so important for you to be here in New York as we approach St. Patrick's Day?
I have to say it's a very unique experience. And when you think back a couple of decades ago, you'd see so many traders going around with pieces of paper. It shows you how much we've evolved over the last number of years. My visit to New York is very important. We've met so many businesses here, but particularly for our culture, for our people, it's the most important thing for our Irish relationship with the US. As we approach the 250, the signature of the Declaration of Independence, 56 signatories, 3 of them were Irish, born on the island of Ireland, and we're really looking forward to growing that relationship and really making it our relationship that delivers for Ireland and delivers for the US.
And I know you've had a full slate of meetings since you've been here, and then there was a breakfast with Ireland Inc. this morning. What were your takeaways from those conversations so far?
The takeaway is that we really keep working on a very unique relationship, that we have to encourage business, academia, everyone around the table to ensure that it grows over the years ahead, because it's delivering for citizens on both jurisdictions, and you can see that's very, very big. Right now, every single day, over €4 billion of goods and services crosses the Atlantic between the EU and the US, and that is the most integrated, the most global trading relationship, and it's one that really needs to be protected. And what we're looking for is stability, looking to grow it, and looking to invest more in the US.
Why so?
because it's unique in terms of the scaling opportunities in the US. About 32 million people have Irish heritage, 10% of the population. And for Irish companies coming out here, that connection enables them to grow business ties and grow their export markets. And right now in Ireland, we're really focusing on delivering on our exports. The top 10 companies in our country employ 450,000 people globally. And Enterprise Ireland, and Kevin Sherry, the chief executive that's with us here, is very focused on doing that. We have our own agency working with Irish companies to get into the market here in the US.
How would you describe the current relationship between the US and Ireland economically?
It's very strong. We're the 5th largest investor in the US economy from an FDI perspective. When you consider our size geographically and our population, that's a huge statement. We're second only to Germany from a European context. And that's why we want to continue growing that, continue investing more. And that €6.1 billion of investment over the next number of years will add to some great companies from Glen Dimplex to Curry Group. Curry Group invest $1.5 billion in raw materials every single year in the US. And Ryanair have huge contracts with Boeing, over 300 MAX aircraft to come forward over the next number of years. That's what we're at. We're about business, about growing relationships, and we want that to continue.
And I know part of the reason you're here is to do outreach for St. Patrick's Day. What do you want people to know and investors to know right now?
I want them to know we were a very pro-business jurisdiction. We're a small country, but an agile country. We have a common law jurisdiction. We offer certainty. We're very much at the heart of Europe. And if you invest in our country, you have absolute certainty to know how your investment will be treated, and you have access to the gateway that is the European Union with such a global market. Ireland is the place to do business.
All right, Peter Burke, thank you so much for joining us at the New York Stock Exchange. We are going to bring in Ian Hyland, the president of Ireland Inc. Welcome to the New York Stock Exchange.
Ashley, thank you for having us this morning. It's a great honor, as always, to open the market. So let's hope it stays green for you today.
Yeah, yes, we do hope to see green across. There is green. You're bringing the luck of the Irish. Green across the board.
Absolutely, of course it's green. I think, in that context, the greening of America from an Irish business perspective is very, very important to us. The work that Ireland Inc. are doing, 200,000 people across the United States get up every morning and go to work in Irish companies. And that is expanding at an unyielding level, which is very exciting for us. It's also a great balance in the context of what's happening with US corporations and their incredible investment across the island of Ireland, which runs back 70 years. So what we're doing here today is cementing that relationship and the positivities around it.
Why do you think that relationship is growing at the rate that you mentioned?
Well, from an Irish company perspective, the United States is the only place to expand. I mean, the level of scale potential, the access to capital markets here in New York Stock Exchange, for example, it is a no-brainer from that point of view. But also those Irish companies, listed here, for example, Smurfit Westrock investing over a billion new fresh dollars a year, CRH, Ardmore Shipping, and the list goes on. And I think over the next year or so, we're going to see a further expansion of that in a very, very aggressive, positive context.
And I understand Irish companies support over 200,000 jobs here in the U.S. Why do you think we see that huge number?
Well, the thing to remember is that's 200,000 direct jobs. When you add the indirect pieces in service and in tourism, it gets bigger and bigger. And why you see that? Well, Irish companies recognize the value of scale. And to scale, they employ. And that's what we're seeing here on the ground. Across all 50 states, 52 weeks of the year. St. Patrick's Week is a very important week for us, but there are another 51 weeks of the year for Irish companies who are here with boots on the ground.
And I understand there are 1,000 U.S. businesses in Ireland. Why is it so important for U.S. businesses to be growing in Ireland?
Well, Ireland. Well, I think it is what it says on the tin. Those companies have been there for decades, and companies like Pfizer with us this morning, and they're making a significant return to the U.S. economy through their output from Ireland, and that has been going for 70 years, and it still runs. Particularly now, where we see the also expansion of technology platforms, AI particularly. And also Ireland's proximity geographically, but also its relationship with the United States means it's a perfect access to Europe for US corporations.
Can you tell us what Ireland Inc. does? What is your mission?
So we promote and act for Irish businesses across the United States. We work with the United States in helping promote the US as an investment platform and location. So what we do with Irish companies is we help them locate in the right locations, find the right talent, give them advice where required. Now we're helping them with their capital markets access, because it's one area that we feel is vitally important. Accessing capital for any growing business is mission critical, and no better place than the United States to do that.
What type of advice are these businesses asking for?
Where to play strategies. I suppose in a rather uncertain environment across the world, where there's certain places to play. United States is that. It's the most pro-business continent across the globe, and in that regard, it is simply, it's helping them with the first level of transaction, getting into the United States. Where should they base themselves? Where should they position their CEO? Where should they access for capital markets? And we're here to help with that regard.
Why is it so important to be sharing this message at the New York Stock Exchange?
Well, this is the center of economic activities for all corporations. Here we also have an intersection of US corporations invested in Ireland, Irish corporations invested in the United States, all here today, many of whom are listed, Irish and US. And I think to make that statement, this is the business statement for business people. Business people and businesses need to control their own destinies, supporting their state agencies, in our case, such as Enterprise Ireland, IDA, and the United States, Select USA. And the New York Stock Exchange is the perfect platform in which to communicate that.
And in 1 second, how will we be spending St. Patrick's Day tomorrow?
I'll be spending in Washington, actually, doing God's work on behalf of all of us. So.
Amazing. Ian Hyland, president of Ireland Inc. Thank you so much for joining us at the New York Stock Exchange.
Actually, thank you for having us. Thank you so much indeed.
Congratulations. And before we go, CoinDesk is in the building. The media outlet is launching a new weekly show called Public Keys, filmed right here at the New York Stock Exchange. The program will explore the intersection of traditional finance, macroeconomics, and digital assets. Public Keys premieres today at 1 p.m. on CoinDesk and will air every Monday thereafter. Let's hear from host Jennifer Sanasi for more about the show.
Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
And let's take one last look at the markets. As we just mentioned, the luck of the Irish has landed at the New York Stock Exchange. The S&P 500 in the green, 1.25%. The Dow is up more than 1%. That's going to do it for us today on NYSE Live. Tomorrow is St. Patrick's Day, and we'll have more from the floor of the exchange.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?